Whether you admit it or not, the modern financial system does not look at you as an active investor. It looks at you as raw, disposable fuel designed to keep a massive, invisible meat grinder running day and night. Every single green candle flashing on a stock chart, every urgent breaking news notification screaming on your phone screen, and every single self-proclaimed teenage millionaire flashing luxury watches on your social feed share a single, hidden, and highly predatory objective. They want to weaponize your natural human impatience against your own bank account. This is not a fair game where the best man wins. This is the oldest, most ruthlessly engineered Sazan Sarmali, the ultimate retail trap in human history. And today, you are going to see exactly how the jaws of this trap snap shut on millions of linear minds every single day, leaving them completely broke while the elite laugh all the way to the bank. Let us dissect the anatomy of this financial slaughter from its very first phase, the moment the illusion of wealth is born. The entire cycle always begins with a deafening roar. A certain asset, whether it is a hyped-up tech stock, a volatile meme coin born from a joke, or a heavily manipulated commodity, begins to climb. Day after day, week after week, that green line shoots straight up into the stratosphere like an unstoppable rocket. In the professional trading world, we call this the green euphoria phase, but on the streets, it is nothing more than a giant digital mirage. Human biology is fundamentally hardwired for tribal survival, which means when we see an entire crowd running at full speed toward a sparkling gold mine, our primal brain overrides all logic and screams a terrifying, deafening command into our ears: you are getting left behind. This is where the psychological poison known as FOMO takes total control of your nervous system. You watch people who are arguably less intelligent than you making thousands of dollars overnight by doing absolutely nothing. The financial media feeds this monster relentlessly, printing sensational headlines designed to trigger your deepest insecurities and make you feel like a fool for working an honest job. The social media echo chambers amplify the madness until it turns into absolute collective hysteria. And right there, at the absolute peak of the mountain, when the excitement has completely blinded every ounce of common sense, the retail investor finally breaks down. They open their apps, they clear out their hard-earned life savings, and they throw every single dollar they own into the blazing furnace of the market. They buy the absolute top. They become the ultimate bag holders. What their linear minds fail to understand is that the exact moment they happily entered the market, the giant institutional whales and market makers had already locked the exit doors from the outside, transforming the retail crowd into nothing more than exit liquidity for their own massive profits. But this grand illusion does not just work because people are naturally greedy. It works because the vast majority of the modern crowd arrives at this high-stakes table completely broke and utterly devoid of financial discipline. This is the structural flaw that ensures the retail investor will always lose the war. People do not build a rock-solid foundation of capital first. They do not have a boring, bone-deep saving routine. Instead, they try to bypass the laws of time. They take money that they actually need to pay their rent next month, money meant for groceries, utility bills, or emergency health care, and they gamble it away on a volatile chart. They are treating the global markets like a digital casino, hoping for a quick hit that will magically solve all their real-world financial problems. Because they possess zero baseline liquidity, they are operating on borrowed time and immense psychological pressure. They are building a financial house of cards right on top of an active volcano, completely blind to the fact that the wind is about to change direction. And then, inevitably, the music stops. The artificial hype dies down. The green candles vanish into thin air, and the electronic screens turn into a devastating, crimson bloodbath. The market starts to correct, reversing its course with a violent, downward momentum that catches the retail crowd completely off guard. This is where the time bomb starts ticking loudly against the broke investor. When you are trading with your survival money, you do not have the luxury of patience. You cannot afford to sit back and wait out a multi-year bear market like the institutional giants do. As the value of your portfolio drops by 10, 30, 50%, the real-world pressure begins to crush your soul. The monthly rent is suddenly due, inflation is eating away at your daily purchasing power, and your family needs real cash, not a bleeding digital asset. Your linear expectation of constant, effortless wealth clashes violently with the cold, exponential reality of a market crash. The psychological torture becomes too heavy to bear, and insomnia takes over as you stare at a screen that represents your disappearing future. This precise moment of maximum pain is where the trap executes its final, most profitable phase, the brutal retail shakeout. The market makers and algorithmic systems know exactly how much pain the average human mind can handle before it completely snaps. They intentionally drive the prices even lower, creating a false sense of endless doom to break the last remaining lines of defense. Terrified of losing absolutely everything, caught completely on the wrong side of the trade, the panicked retail investor finally capitulates. They hit the sell button at the absolute rock bottom, liquidating their assets at a catastrophic loss just to salvage whatever crumbs are left of their initial capital. They pack up their empty bags and leave the arena in tears, swearing that the market is nothing but a rigged scam. But the ultimate tragedy occurs just moments after they exit. The exact same assets they just sold for pennies on the dollar are quietly, systematically scooped up by the patient, wealthy elite who were waiting in the shadows all along. The money did not magically disappear into the void. It was simply transferred from the hands of the impatient and broke to the accounts of the disciplined and wealthy. The system worked exactly as it was designed to. It engineered a crisis, manufactured absolute terror, forced the weak hands to dump their value, and rewarded the cold, calculated patience of the giants. This cycle has repeated itself every single decade for centuries. Yet the masses never learn the lesson because they are trapped in a perpetual loop of instant gratification. They want the final millions without the invisible, boring years of building true discipline. They want the spectacular avalanche without ever respecting the slow, quiet accumulation of the snowflake. But the cold mathematics of the financial universe do not care about your personal feelings, your social status, or your desperate excuses. The market only respects two things: consistency and time. If you refuse to fight the silent war of self-control, if you continue to chase the loud, deceptive hype of the crowd, you will remain a voluntary prisoner of this linear trap until the day you die. The clock is ticking, the wolves are hungry, and the choice to either adapt or become financial fuel is entirely yours.